what I wanted you guys to show is actually the use of the trader body PD array indicator, because I still have the feeling that some people do not mark the structure correct, and it's actually especially with the indicator, it's pretty straightforward. I hope let's make this interactive, so if you have a question, don't hesitate to ask. I'll put in the chat screen also, so I can see if you put something in the chat, if you don't have a microphone. I take it we all know the 5 definitions for our chart patterns, being the swing high, the swing low, fair value gap, POI zone, old high, old low, and then the breaker. And actually there's one definition more, and that is a valid close above or a valid close below. So give me a thumbs up or whatever signal if that is all clear. Okay, the thumbs work. So we're not going to go over that, but what we are going to go over, or I want to go over, is the trader body PD array indicator, because if we put the settings, there's a whole bunch of possibilities here, but we're not going to use anything if we want to mark out structure except for the old high and the old low. And then we mark off all these options. So we show the old high and we show the breaks of the old high, and we only show the last. What is that going to do? That's going to give you your zigzag pattern, so to say. Because I taught you guys that after a break of an old low, we want to wait for a price to take out an old high. Well, the only thing we have to check is, and I believe, but I'm not sure, that the indicator also checks if it is a valid break or close above or not. But if you want to follow or mark out a structure, and let's start with, because in the weekend we always want you to, or I advised you to mark off beginning with, where is my replay? Where is Sunday, Friday, Sunday? Okay. So in the weekend, you mark off the structure on the H1, and the indicator also shows the look-back period for, well, in this case, the H1, because we are on the H1. So if I draw a vertical line here, then this is the look-back period for the H1. But if I go to the H4, we get a different look-back period. And that is all given by, or determined by which time frame you are. So if you are on the H4, this is the look-back period. If you are on the H1, this is the look-back period, and here is the H4 look-back period. And Munir wants to get in. Good evening, Munir. I hope you hear me. This is the 1 hour, and if you go to the 15-minute, you get another look-back period. Oh, I have all the M50 mark-offs already there, because I don't want to draw or take too much time drawing a structure, because you all know how that works. So this is the look-back period for the 15-minute. So we all have different look-back periods, and they are all automatically plotted on the chart by the indicator. So that's why we want to use this indicator, so there's no, well, you don't have to think that hard, let's call it like that. So, if we want to mark off the structure, the dealing range structure, I told you guys that, okay, after a break of an old high, we wait for the break of an old low. So our zigzag structure is easy to follow, because if we have a break here of an old high, we follow price just as long as we break an old low, which we do over here, which is indicated by the aqua line. Then we track price down, and we take the lowest point after we break an old high. And now the last one was an old high, so now we track price until we break an old low. And now we mark the lowest point and we look for the break of an old high. Then we follow price up, and now we have our structure. But this is just a zigzag structure. For our dealing range high and dealing range low, this is, so our indicator just stays to these settings while drawing structure. We do not need anything more. So here, if we start looking here, this here is our dealing range high, DR high, trader body DR high. Okay, and we're making higher highs and higher lows. So we are in a uptrend. When we are in a uptrend, how do we define a dealing range low? Who can tell me? You can either use your microphone or you use the chat. Oh, now I think the recording is without sound. That's so great. Never mind. Break of an old high. Correct, Walter. But what is the old, the dealing range? Well, no, it's not quite correct. It's not the break of an old high, because there is an old high here. And this is not the definition of break of the DRI. Correct, Munir. As soon as we break the dealing range high, we're going to look, and if you think, if you have problems looking for what's the lowest, just draw a rectangle till we break with a valid close above the dealing range high. And then if you draw that box, first we check, is this a valid close? Yes, this is a valid close above. Then it's just the lowest point of the box, which is our dealing range low. Dealing range low, okay. Okay, so how in an uptrend do we define a new dealing range high? Again, please answer in the chat, because it's important for me to know that you understand how this works, because I have been explaining this, but if you're doing this wrong, you get all the structure wrong. So after the break of an old low in an uptrend, correct, we look for the highest point since the previous dealing range high, which is over here. So if I hide the zigzag structure, okay, and now the same goes, we are still in an uptrend, so if we break with a valid close above, which we do here, we again look for the lowest point between where the dealing range high was confirmed and where it was broken, and we extend that in time. So, and here we go again, same thing all over. we have a when do we have a new dealing range high? Okay, when we break, and that's why you have to put the indicator on the settings I just showed you. I will show them again. So these settings, so don't do this. Why not? Well, you will see, because we get all kinds of lines on the chart, and that's only confusing, and we don't want to be confused, we want simplicity. So make sure you do only show the last one that broke, and then it goes looking for the next one in the opposing direction. So again, here we go. When do we we're still in an uptrend, so when we break this old low, this high here is confirmed as being the dealing range high. When do we have a dealing range low? Well, when we have, is this a valid close above? No, it's not. It's only here. So now we go look for the lowest point, which is over here, and that is our new dealing range low. Okay, I take it this is clear. Please give me a yes if it is, or a thumbs up. Yeah, that works faster. One will do, Ramazan. Now what do we do when we break in an uptrend? When we break our dealing range high, we draw our buy and zone, in this case the 59 till the 97, and we extend it in time, and we mark it off as the 59.97. We also draw the 50% line, and we also draw the 88.6 in case price retraces all the way down, which I have bullish over here. Then we just hey, where's my 50%? Oh, it's gone. Okay. And that's not 80, but it is 50. Okay. So now we delete the fib, because the more shit we have on the chart, the more complex it becomes. So here you do the same. As soon as we make a new break, you do the same, and you mark off these zones. And here we have the 88.6, and here we have the 50. And again we remove this one. Now if we remove the indicator completely, in case of if you want to look for POI zones to trade off, what would be a very wise thing to do? First, let's first call it, if we are in an uptrend, where is it wise to look for a long? In the premium or in the discount? Because what is premium and what is discount? Well, everything above the 50 is premium, and everything below the 50 is discount. So of course, if you want to go for a long, you want to wait, at least wait, and it doesn't matter on what time frame you are. You always want to look for PD arrays in the discount zone and not in the premium zone. So if you look here the first move, what do we have on premium? Well, now the next indicator comes to mind, which is the POI liquidity profile from Jan. And if we are on the 1 hour, we want to have at least a 4-hour PD arrays. And now I have to put in the replay function. Okay. So the first thing we want to do is, if we want to trade long, we have a time PD array. Let me first explain. You put these on, not on three, on two zones. So you only show the breakers in the direction, and the number of POIs to display is n. This n means this number, and you want to select 2 to show. And we take one time frame above in this case. This is discount, and that is premium. It's a bit weird because the colors are reversed. I thought I fixed that. Never mind, we all know that below the 50 is a discount and this is a premium. So what does what do these lines mean? Well, if we hide all images, we have a 4-hour bullish POI zone, and this is inside the discount zone. So if time is if this is the trading time, and we just broke the dealing range high, so we expect at least a retrace before we go up. So what's the nearest point price can retrace to and is in discount? Well, that's this POI zone. And what is another one? Well, let's hide the drawings again. This line is the old low belonging to the H4. You can check it. Here we go to the H4. Where was our POI zone? I'm not quite sure. This is our POI zone over here. And this low is the old low. So if we go back now to the 1 hour, and the next H4 POI zone where price could trade to and then bounce off in our discount zone is this one. And that's also inside our 59 to 79 buy zone. Well, but what we do is we wait, we do nothing except expect that price is gonna after it took out the dealing range high, it's gonna seek liquidity to go higher because we are bullish. So you only wait on the H1 till you get a retrace. Here we are, and the indicator is just indicating it that we traded into the H4 POI zone. We are in discount. Our next POI zone is this old low. But when we are here, we are in discount, we are in a higher time frame, PD array bullish, and we are bullish. So our first buy opportunity, or first time we can check for a buy opportunity, is when we touch this POI zone. That's the first POI zone inside the discount. So then you just go to a lower time frame, and you want to wait. And now this indicator, the trader body PD array indicator, gets into play again. But now we're gonna mark off not only the last but all breaks, and I just keep the sessions apart, because I just want to how do I explain this? I just want to explain how to work with the indicators. So I am not focusing on the sessions. Inside the 5 minute, we don't look to, we already established that we are in a 4-hour PD array. So we now want to see 5 minute, now we want to see the 1-hour PD arrays. Let's show if there is a refinement. Yes, there is. Because here was a 1-hour PD array, which we traded into. And now we want to look for a buy setup. So how do we do that? Well, we have another indicator. I don't even have it on the chart here, but it is the entry indicator. And all the entry indicator does is as soon as we have a lower point inside a higher time frame PD array, we just keep following price with the Fibonacci tool. And every time we make a higher high, we add it up. So, and now we trade to the 59, and this is the zone where you enter a long, or at least you're gonna check if you put your stop loss here and you go to the next PD array, do we have some kind of a margin to go for a 3R or a 2R, whatever you want to trade. In the course I stated trade 3R and then let it run, but and I am referring red. Yeah, Walter, red is discount. That is a bit, but you know, the bottom is a discount and the top is a premium. But you had also trouble with okay, I get break even or whatever. The rule states if you enter this trade, there's two ways you can do this. When price gets to the high where you draw your fib from, you in this case you have let's see, you have a 1.45 R. There's several things you can do. You can even close the trade. It's more than one R, so it's not a bad situation. You can take off, for instance, half, or, and this is dependent on is this zone already mitigated, then you can move your stop loss to at least a level higher, so just below this low, and then wait for the 3R to get. I should have marked off the 3R first, I'm sorry. Let's do that. Where is 3R? 3R was inside our higher time frame PD array over here. So this was our ultimate target. So there's two things you can do. You move your stop loss all the way to break even when price trades above this high, the high where you draw the fib from. So let's see what price does, if we get there or not. Oh, I should have looked at the session time, because this is in the evening, I see. Never mind, it's it's the principle that counts here. So as soon as we trade above this one, let's see, here we do. Yes, here we do. So this is the time you have options. You either move your stop loss to break even and let the trade run to your ultimate target. But if you have a lot of break evens in a row, then you're gonna doubt the strategy. I believe you have something like that, Walter. It's not you. if you do everything according to the book, then it's just a good trade, but it just went to break even if you put your stop loss to break even here. If you have that a lot of times, what you can do is, if price trades here, just take off something. For instance, let's say you traded 5 lots, take off 2 lots. Then leave your stop loss where it is, and it was over here. And then let the rest run till the 3R. If it doesn't, yeah, well, then it will take out your stop loss. Then it was a failed setup anyway. But especially in Frankfurt, there are a lot of situations where price first moves away, then moves back to your, well, if you moved your stop to break even, moves back to your break even, and then runs for 3R. So that could be an option. Just take a partial on top here, and you can also say, okay, it takes too long or whatever, then just close your trade, and then you have at least have a profit. Is that clear, Walter? And everybody else? So this was maybe a bit off the time, but it is just to show, because this would be, oh, that's a 3 o'clock. What time zone am I on? UTC2. Okay. This was in the middle of Asia, never mind. Next thing you have to watch is, if you go for a 3R trade, check if there's something unmitigated around this 3R. Well, I can see here on the 5 minute, there is something unmitigated. And now we come to another feature of the indicator. I'm going to switch from entries to take profits to how to use the indicator. The higher time frame PD array also indicates that there is a higher time frame PD array here, but the indicator, the PD array indicator, also shows, if you show all the breaks, so not only, I'll go back so you know what I mean, so not only the last, but if you show them all, what is it indicating? Well, as soon as you see a break down of an old low, then you can draw a box from this old low to the high up there, and this is called order flow. This is bearish order flow. So as soon as this is not a valid close, so where is it a valid close? At that candle, then you draw a box there. This is order flow, bearish order flow. Here, is this a valid close? No, it's not. The next candle is a valid close, so you take this one to the highest also, and this is order flow. Well, you get the drift. We get a break here, you take the highest point there. This is order flow. This is not a valid old low. And this is, where do we get the break? There. What is the order flow? This candle is the valid break, or very close, valid close below. So now we close below, we trade into the order flow, and we go lower. Do we go lower than this? No. So now probably the order flow is going to change. So here, this is order flow, and here we trade below, we trade into the order flow. Do we break below this one? No. We have new order flow. which is this one. We go below, we trade into the order flow, and we go lower. And now we see something happening because the last order flow, because these are not a valid close below. There's not a single valid close below. Well, this one maybe because there's a gap. Is that a valid close? No, it's not even a valid close also. So the first valid close below doesn't happen anymore here, because then we would have seen a big aqua. So this is the last order flow. Now we trade above the order flow, so now we get a change in order flow. So now we follow not the bearish order flow, we follow the bullish order flow, which is this one. Bullish order flow. Okay, here we break up again. We have new bullish order flow. And here we hit the order flow and off we go. Oh. Here we have the order flow. Here we closed above, we traded into the order flow, mitigated a fair value gap. I don't trade fair value gaps, but I trade order flow. So we trade into the order flow. So when you are bullish, you can enter a trade over here if you missed a trade. As long as you are bullish, as soon as we trade into the order flow, you can enter a trade. Oh, sorry. Enter a trade as long as you put your stop below the order flow. And now you go for 2R, 3R. That depends on your taste and depends on where you think the order flow, because everything that happened here is just going to be mitigated now. And now we were taken out. And that happens too, Walter. I believe this is a setup because we have these equal lows. You had something like that this afternoon. You asked me a question, how can I win this trade? Well, if you do everything by the book, and I did everything by the book, we just changed order flow here, because now here we break the order flow, this one. So now we follow order. This was a loss, order flow to the downside. What is order flow to the downside? Well, as soon as we break an old low, this is the order flow. As soon as we trade below an old low, this is the order flow. And now it's time, because we are way too focused on the short term here, to keep an eye on our liquidity profiles, because what is the next higher time frame PD array? That's this old low here. So price is probably going to this old low. That's the draw on liquidity, as some people call it. Well, if we trade into our order flow, and now the problem here is we got one unmitigated order flow above here, so this is tricky to enter just blindly into this move down. You need confirmation before you can do that. But let's see. Okay, we traded out of the order flow. Now you could see how much this is, because this is the next higher time frame PD array, or the old low belonging to this zone here. And oh, this is the 1 minute. sorry, the 1 hour, and this was the 4 hour. But this is not a wise trade, but I don't know what time is this. Oh, this is also in Asia. Never mind. I'm just explaining how you can trade the order flow. Let's see. And we just missed the higher time frame POI here, but we track order flow. This was the order flow, and as soon as we trade above the order flow, which we do here, we should close our trade. So this would have been a break-even trade. And now it's time to look for what? Shorts or longs? Watch the time frame, because this indicator, the POI zones from Jan, is updated live. So every time there is a higher time frame PD array mitigated, this is going to change. So now we have this liquidity and this liquidity to go after. We failed to take this one. Our order flow has changed from bearish to bullish. So now we can go for this liquidity. Walter, do you use the POI liquidity profile indicator? Because the situation you gave me, maybe we can go over that. Let's see, how do I do this? Just a second. Yes. You asked me how can I how can I get a win here? Because you did everything by the book. Now let's go to replay. I guess it was here. So first off, you were looking for a short. And maybe you were on a lower time frame and only checking 15-minute and then on the 1 minute. But that is the danger if you only look at one time frame. But this was the profile. $15-minute higher time frame POIs on the screen here. But this was not a, I believe I have to check. Can I check this? Just a second, I try to find your setup here. Oh yeah, geez, you have Los Angeles time. Let's check. Entry was somewhere around 9. Yeah, okay. Was it the 1 minute? Yes, it was. Now I have to get back to this again. Okay. So bullish order flow. This is bullish order flow. Correct? Follow the order flow. Here we have bullish order flow. Is this a break of the order flow? No, it's not. A valid close below. So we still track bullish order flow. And we have this higher time frame PD array. We have bullish order flow. Do we break it? Nope. Or close below, let's call it what it is. Now we close below. But we also enter a higher time frame PD array. So this is not very handy to go for a short if we enter in a discount and we enter a bullish PD array. So we better wait for the reaction on the higher time frame. Okay? Now follow the order flow, because here we broke, so now we have bearish order flow. Where is it? Bearish order flow. Do we have another one? No, this one did not break. So this is order flow, and we are not looking for a short because we are in discount. We are looking for a long. Okay, so let's see. We did have a entry over here. Because, and we went too fast because we had a, let's see, we took out an old low here, I know, because I looked this afternoon. I have to go back further to show the old low. See, that's why we have this POI indicator on, because this is a higher time frame old low. And what do we do if we trade into a bullish PO higher time frame POI zone? In this case, we took out. Let's get this one out of the way because this one is now showing the low of the period. But we just took out the low. I'll go back. This low is a M15 old low belonging to this POI zone. Old low, and that liquidity was taken. So now, okay, we trade below and immediately above. So now that for us is a signal. Okay, let's see what price does. Okay, we take out this high. We want to follow price to the upside, and whichever height it reaches here, we keep following it with the fib tool. And I went too fast. This is our entry long. This is our stop loss, and we check, do we have something of 2-3R to trade? Well, this is 3R. Is there open? Ah, look, there is an open order flow. That's cool. So this is 3R. So this is a very nice setup for a long. And it takes a while, but there we are. And now we trade into the higher time frame PD array. but actually our trade has already finished. And now if you go to the 5 minute, because we do not only trade the 1 minute, and we take the 1 hour PD arrays. Now we see, okay, we took out this old low. And where is the level on the 5 minute from where we can draw a fib? That's this level. As soon as we trade above this one, because we are here in discount. Let's see, do we take that high? Yes, we do. So now we follow fib again, but now based not on the 1 minute, but based on the hourly PD arrays. Did I switch to the hourly? Yes, okay. And now we just wait for price to trade to the 59. And you see that there is a POI zone. It's even an order block, I can tell you. But that's not correct. This is the order block. But never mind, we trade the 59 retracement. So where you were looking for a short, well, in this case we do not get the entry. Probably, let's check. No, it's already gone above. Well, that's too bad. Shit happens. I believe, Ramazan, you trade a lot to the 50%. You can always check if you want the real distance. You can always check the candle close, and that would have filled it. Okay. By a fucking pipette. Is this a think market? Let's check, because I don't trust think markets very much. Let's see. Let's go to the 5 minute. And there you are. If you do the candle close, I told you before, Walter, I don't like think markets and those jokers. Let's see, on the 1 minute, we weren't trading the 1 minute, but the 1 minute gives you the exact fib retrace, and this is why you should not trade what's it called? Or at least base your trades entries on either Forex or FXCM. Not Wanda, which also sucks, but you see the difference here. This would have been the perfect entry with well, maybe half a pipette or a pipette drawdown. So I don't know if that's the case, but this would have been a mistrade on your network, although it was a perfect setup. So better base your trades on FXM or FXCM or on Forex.com. Okay, what are all the other sections for on on the PD array? Well, actually, you don't even need them, and I showed you that you don't need them, because it's only confusing. The more you have on your chart, the more confusion you get. So you can paint the premium discount from the price lag you're in. Okay, well that's cool, but you can see the 50% line, which we are at the moment here, by yourself. So that's not very hard. What else do we have? Fib levels. This is interesting, the fib levels. Why is this interesting? Well, because the fib levels are very sensitive. I'll remove all the other stuff. This one. These fib levels are time-based Fibonacci retracement levels. What does that mean? Well, in this case, you see these small lines. This is the buy zone. This is the 88.6. And if we get Jan out of the way, here we see the sell zone. And this is the 88.6. No, that's not correct. That's the 79, I guess. Let's see. But at least the levels are time-based. So from the look-back period, we take the high and the low, and then plot out these levels. Well, you see how sensitive these levels are. So you can use them in your trade setups for extra confluence. Show these, and then we have buy sell zones. Yeah, these zones are not the 59, it's the 61.8. 618, 79, and this is the 38382. Okay, yeah. So these levels are very sensitive, and these are time-based retracement. So these small dotted lines can help you in well, in this case, when we have a continuation, we just traded this level, then got more liquidity, traded one level lower, get some liquidity, and now we trade these levels up. And let's wait till our indicator updates the levels. Yeah, komt u maar. Okay, here we are. Okay, that is the fib levels, the monthly, weekly, daily, 4 hour, 1 hour, 50-minute dividers. That's well, obvious. If you put it on the 240, you get the dividers 4 hour. This is each hour you get a divider. Why is this important? Well, then you at least know if the indicator will hurry, yes, when the close of the hour is. So now you know this was the open on the hourly and this is the close on the hourly. So this is a clear form of mitigation. So that's how you can use these things. Put it on the monthly so you don't. Start date, this is where it starts looking for structure. This is intermediate swing high, swing low. I'm not sure if you are familiar with ICT's intermediate swing high and swing low, but that is what this is. I'll explain what it is. An intermediate swing high is a swing high with a lower swing high to the left and a lower swing high to the right. And what you see here is all these marked off swings are intermediate swing highs, and it's drawing liquidity lines. So this is one big move, so there is a high chance that in this zone there's going to be a run for liquidity. but that's for something for a totally different strategy. But it's there. I just want to show it. Fair value gaps. Everybody knows what the fair value gaps are. Needs no explanation. Bullish POI zones and the bearish POI zones. Yeah, only show last is not really relevant. It just shows the POI zones on the current time frame. For the higher time frame, we have the POI liquidity profile. I see people who have all these things, all these features on. I think it's maybe it's a matter of personal taste, but I think it's very confusing to see all these zones, because yeah, okay, this is a bearish POI zone. Now I have to go lower. No, it's just mitigating and then mitigating down here and then go higher. So if you want to work with these, just mark off, it's just a tip, the highest, and which caused the break. There was this one, and the lowest, which is this one, because those are the two that really matters, and the rest is all internal stuff, so that's only confusing. Yes, see you, Ramadan. Sorry, I didn't see your message. We're gonna call it a day anyways, because it's like been over an hour. I hope you guys learned something and are gonna work with the indicators, because it take you, well, it's gonna tell you a lot of information that is very important, whether to take a short or a long, for instance, but also where we are in the sequence. And don't trade only on the 1 minute, because you'll get confused very much. So if nobody has anything, any questions anymore, then I would like to call it a day. Thank you for joining, and of course if there are issues or stuff you don't understand or you want an answer to, just put them in the Discord and we'll look at it. Okay, bye bye.